Hey all, welcome to ShareTrack. This is Raj here. Big news, my friends. Membership feature is now enabled in our channel. Please feel free to join and help grow this channel. First of all, I want to say a huge thanks to all our amazing subscribers who enabled us to reach this stage that we could switch on the membership functionality. And then a very big thanks to the inaugural members, Inf, Yasam Nataraju, Lenny Holistica, and Jesse Isaacson. Jesse, thanks a lot. Inf, thanks a lot. You guys have been there right from day one. I'll never forget that. That said, I don't feel alone anymore in the new members area. Thanks for your company. I'm looking forward to see more of you in the members section. And I hope we have a lot of fun out there. That said, today's topic is BlueBird Bio. Let's get started. Welcome back, friends. Guys, we have been following BlueBird Bio and have been with it through ups and downs. In my case, mostly downs. Today, I want to take a look at their bullish price action in conjunction with their Q2 earnings report and give you my personal opinion. As I mentioned in my video from yesterday, they gave us some good positive catalyst by saying that they witnessed continued strong commercial launch for Zynteglo and Skysona and have said that they have 16 patient starts across both programs. Now, the information that I ideally would like to have is how many patients have they enrolled since the beginning of this year, and how many of them have already been started. Just like the 16 starts, are these 16 starts for Q2? Or do they include the Q1 numbers? That's what I would like to know. I'd also like to know their projection for until the end of the year. I'd also like to know some information like what is their average revenue per patient for Zynteglo and per patient for Skysona. Those kind of information can put a lot of color, but I can understand the hesitation on part of BlueBird to make those kind of numbers out. So we'll take what we are given. They reiterated their BLA, the information that their BLA for lovo-cel has been accepted for priority review with a PDUFA goal date of December 20, 2023. Once the FDA accepts a filing for the approval of a drug, the agency must complete its review process within 10 months in most cases. The date of the end of the review period is referred to as the PDUFA date. PDUFA stands for Prescription Drug User Fee Act. While PDUFA dates are set as a regulatory filing is accepted, the FDA may sometimes extend the review period. And in this case, for BlueBird Bio, they have a priority review. So it happens at the end of 6 months instead of 10 months. So it's a early review. And most commonly when additional data is required, then it doesn't prevent the FDA from extending the PDUFA date. So we have to keep that in mind. I'm not saying it's going to extend for BlueBird, but I'm just saying that while we look at the bullishness, we also have to look at the risk factors, which may or may not happen. So that said, let's go to the TradingView platform to see the price action and then come back to look at the financials. Well, here we have a look at the price chart for BlueBird Bio. And as you can see, all these candles are a one-day candle. And we had a cup and handle pattern, which was supposed to give us a target price of 4.33, but we never reached there. And we probably touched that today at around $4.38. So we touched and exceeded it briefly before coming back down again. Now, one of the things I would like to point out was that yesterday we closed at 3.58 or something like that. And today we opened much lower at 3.49. And then we have had a positive action where the share price had gone up, and now it's at present, it's at 3.94. We can see that the momentum is above average, and we also see that the MACD is bullish at this point of time. So most of this is because of the way the market has received the Q2 earnings report, and it seems the market is looking positively. And if we were to look at their earnings, the way they came in was that their earnings per share, which was expected to be around minus 0.705, came in at minus 0.67. So there was a 5% approximate surprise out there, positive surprise, which is good. The market likes EPS getting better at any point of time. And again, the revenue came in below expectations, almost 39% below expectations. It was estimated that they would log a revenue of 11.303 million, whereas they came in at 6.89 million. And friends, as I mentioned before, for companies like these, it's very difficult to estimate the revenue. And especially in case of BlueBird Bio, the main complication, I think, in estimating revenue is that we do not know how they are handling the money back guarantee, and we do not know how the payments are being made by the payees. So overall, I think the market is looking at the EPS and saying, yeah, I'm happy. But I'm going to give you my analysis and conclusions. For that, I'm going to show you a chart. Well, friends, here's a chart in which I'm going to compare Q1 2023 to Q2 2023. And here's my analysis. When it comes to the cash position, you can see that it has decreased by approximately 73 million from Q1 2023 to Q2 2023. And despite the decrease, the company anticipates its cash to be sufficient to meet planned expenses and capital requirements through Q4 2024. I'm going to talk more about some risk factors later on towards the end. Let's look at the total revenue. Total revenue increased by approximately $4.5 million from Q1 2023 to Q2 2023. The increase in revenue was primarily driven by product revenue from SkySona and Zynteglo. So that's a very good positive for us. You can see a high increase in revenue, and also the fact that they came in better with their earnings per share shows that there is something good going on in there. I would consider that to be a bullish catalyst. Now, next let us look at the SG&A expenses. So general and administrative expenses. These increased by approximately $2.9 million from Q1 2023 to Q2 2023, excluding lease expenses for one of their facilities. General and administrative expenses increased by around $2.9 million. The increase, the company says, was mainly due to commercial costs related to marketing activities for Zynteglo and SkySona in the United States, as well as readiness activity for lower cell R&D expenses. Now, all of these are very legitimate business expenses, so I don't feel bad about them. And if we look at R&D expenses further, the R&D expenses decreased by approximately $3.8 million from Q1 2023 to Q2 2023. And when I look at the pipeline for BlueBird Bio, it makes sense that there should be a decrease in R&D expenses, but I would have expected slightly more decreases, but I will assume that their lower cell related work is actually ramping up as it heads towards PDUFA. So that's what I'm going to assume, but decrease nevertheless is welcome. And the decrease was also primarily due to manufacturing costs for SkySona and Zynteglo, which are now included in inventory and cost of production revenue. So all the costs that were included earlier while it was still in clinical trials have now been moved off because it's no longer R&D, it's more of income and regular expenditure. Now let's look at the net income, which improved by approximately $94.1 million in Q1 2023 due to the one-time gain from the sale of priority review voucher, but the company reported a net loss of $72.9 million in Q2 2023. Friends, it will be irresponsible on our part to not take a look at the Form 10Q disclosures. Let's take a look at that document so that we understand the risks involved. Well, friends, here we are in the Form 10Q quarterly report for the period ended June 30, 2023. And if you look at this particular report, I'm just going to scroll down quickly because there are standard disclosures out here. Now, this is the page where I want to talk about what's happening in terms of the risks that we need to understand. Summary of the material and other risks associated with our business. So out here, what they are saying is we have incurred significant losses since our inception and anticipate that we will continue to incur significant losses for the foreseeable future. And they are saying there is a substantial doubt regarding our ability to continue as a going concern. We will need to raise additional funding. So equity dilution is on the way. And then they are saying which may not be available on acceptable terms. We know the high interest rate conditions or at all, which means that even with any kind of compromise, they may still not get funding. I think that is very unlikely because they got viable therapies which are already marketed and going to be marketed. So I don't think or at all is going to materialize, but there will be some conditions that may not be acceptable to them that might be put there. There could be equity dilution. Failure to obtain this necessary capital when needed may force us to delay, limit, or terminate our commercial programs, product development efforts, or other operations, which means Zynteglo, SkySona, LovoCell, all of them are under a risk of not going further. Among other potential adverse events, insertional oncogenesis is a significant risk of gene therapies using viral vectors that can integrate into the genome. Any such adverse events may require us to halt or delay further clinical development of our product candidates or to suspend, cease commercialization following market approval and commercial potential of our. I think this is a catch-all. So far, they have not had this problem. I don't anticipate them to have it in future, but they are making sure that they disclose the potential risk out there. And they say we rely on complex single source supply chains for SkySona, Zynteglo, and LovoCell respectively. The manufacture, testing, and delivery of LVV and drug products present significant challenges for us, and we may not be able to produce our vector and drug products at the quality, quantities, or timing needed to support our clinical programs and commercialization. Friends, this is a very big concern, especially LVV, which is lentivirus vector. And AVV also has a problem because not only do they need these viral vectors in sufficient quantities, but they have to be viable. And there has been industry-wide shortages from time to time. And if something like that happens to BlueBird, they are saying that it can put a spanner in the works. Changes in our manufacturing process may cause delay in our clinical development and commercialization plans. We cannot predict when or if we will obtain marketing approval to commercialize LovoCell, and the marketing approval of our product candidates may ultimately be for more narrow indications than we expect. If LovoCell or other candidates are not approved in a timely manner or at all for any reason, our business prospects, results of operation, and financial condition would be adversely affected. We have limited experience as a commercial company, and the marketing and sale of Zynteglo, SkySona, and of LovoCell following marketing approval, if and when obtained, will be unsuccessful or less successful than anticipated. So this is something that I agree because companies that have got a well-oiled machinery in place, having marketed multiple recently approved therapies, they have that experience and the network and the contacts that can enable them to hit the road running, whereas Zynteglo has a steep learning curve, likewise for SkySona and potentially for LovoCell. But LovoCell will be a much more smoother sailing for BlueBird Bio as compared to what they had to learn very quickly for Zynteglo. So the learning still continues, so that's the risk they're talking about. If the market opportunities for our product shares are smaller than we believe they are, and if we are not able to successfully identify patients and achieve significant market share, our revenues may be adversely affected and our businesses may suffer. Now, I'm always worried about this particular risk, especially because we're getting piecemeal information about number of patients. Like this time they said 16, last time it was 23. So we don't know the entire universe of patients. So I would be worried about this risk for sure. The insurance coverage and reimbursement status of newly approved products in the United States is uncertain due to the novel nature of our technology and the potential for our product to offer lifetime therapeutic benefit in a single administration. We face unique and additional challenges in obtaining adequate pricing and reimbursement for our products. Failure to obtain or maintain adequate coverage and reimbursement for any new or current product could limit our ability to market those products and decrease our ability to generate revenue. We face intense competition and rapid technological change, and the possibility that our competitors may develop therapies that are more advanced, safer, or more effective than ours, which may adversely affect our financial condition and our ability to successfully develop and commercialize Zynteglo, SkySona, and LovoCell. So Beam Therapeutics is on the way. So these are the things that I wanted to read for you, my friends. So in conclusion, what do I think? I agree with most of the risks that BlueBird Bio has mentioned out there. Those risks are there. Today the market is very, very bullish, and soon we are going to approach end of 2024. And at that time, if they didn't have funding, it would be a big problem. And if they did not get funding in the with the right terms, then we can see some bad implication for our shares valuation. There is also potential equity dilution ahead in the horizon for us. In less than another 12 months, we will potentially see some equity dilution, because I don't think BlueBird will wait for the last minute to raise funds. So for that matter, even by the last quarter, they may try to have equity dilution coincide along with the approval of lower sell, so that a bullish catalyst can camouflage the impact of equity dilution. So those are the things I'm looking at going forward. So my opinion is that I'm going to sell on the profits that I get at this point of time, or wait for my covered calls to be taken over. And then I'll patiently wait to see if I get another opportunity to enter BlueBird. And I'll potentially enter BlueBird again after that lower sell is approved, and we have some idea of what the equity dilution is going to look like. Overall, I think BlueBird is a good company. They are having a steep learning curve. We should also not foreclose the probability that they might be taken over, and if that happens, then we may have good value for our shares. That's my personal opinion, not financial advice. So this is what I wanted to talk to you, my friends. And my question to you is, do you think BlueBird will get funding at acceptable terms and succeed in enhancing shareholder value beyond 2024? Please answer yes or no in the comment section, and I will understand. That's all for today, my friends, and I'll catch up with you in the next video. It could happen very soon, maybe today or maybe early tomorrow. It's earnings season, so I'm busy flat out working. And once again, a huge shout out to all the new members who have joined us and given me company in the members section. I request most of you who can afford to just become members and support this channel. Thanks and have a great day. Bye for now.